Good evening, everyone. Welcome to my video update. Today is Wednesday, March 13th, 2013. I just want to reach out to everybody on this update because I've gotten a lot of questions on the markets lately. Questions of should we be taking money off the table or should we be adding to this rally? And one thing I do want to discuss is, the technicals of the market and why we might need to be a little careful right now. First off, I do think we could, we have already hit the all-time high on the Dow Jones. I do still think we could do it with the S&P. And momentum's a pretty powerful thing, and it's not only outside the stock market but with the stock market, and I do think momentum will drive us higher in the short term. However, we really need to be careful. I'm not the type of guy that really does quotes literary figures, but to quote Mark Twain, history doesn't repeat itself, but it does rhyme. And I promise that'll be the last literary quote you ever get out of me. However, I did include a chart here I want you to take a look at. And when we look at the market and how much it's extended above its 200-day moving average, it is a sign of concern. Not a concern that the market's going to crash, but a concern that we are going to have some kind of a correction. If you look from 2010 up to today, you'll see there's 4 circles. Each circle represents every time the market has been at least 8% above its 200-day moving average, and what has happened right after that. Well, every time it's happened, the market has retreated back to the 200-day moving average. Right now, we're about 9% above it. If we do have a correction, it could be 7-9%, somewhere in that area. Now, I'm not saying it's going to happen today or tomorrow, but if history is, if in our business we have to use history as an indication of the future, it is pretty likely to happen. And I just want to make sure that, for people that are thinking about adding more money to the markets, it's probably not a good time to do it. I would wait to see some kind of a pullback, and I do think it'll be more than the 2 or 3% that you're going to hear on CNBC or Fox News. I mean, not to say anybody's right or wrong, but looking at history, it does show that we are going to have some kind of correction. Also, since in the last 110 years, the market has also averaged at least 10% correction every year. So I just want people, to hang in there. I know there's a lot of emotions right now running high when people see the market keep going up, up, and up. Some of my clients, we have started to take a little bit off the table, and as we do that, people have asked me if we should add more, and I just don't think so. I mean, I think we're definitely going to find a better buying opportunity, although, if you do listen to the TV, it's very easy to get caught up. You'll think the market could never go down. So hang in there and please contact me with any questions. And again, thanks so much for being my client, and I'll touch base with you soon. Take care.